Hello, everyone, and welcome to Silverside's Inside Track with Steven Sulaco and Andy Harrington. Go ahead, Steve. Take us away.
Hey, Andy. Thanks for being on the show today. Appreciate it.
Steve, my pleasure. Good to talk to you again.
Yeah. So today I wanted to go back to the basics, and let's talk a little bit about Life Insurance 101.
Okay.
So we've been having a lot of guys that have been traditional P&C guys or maybe even health agents that are getting more into life, and we thought it'd be fun to just go and talk about some of the things, some of the basics that maybe we take for granted on this.
Oh, yeah, absolutely, Steve. The life insurance industry as a whole has gotten so much more complex than what it was, from products to underwriting to really about anything. Over the last 5, 10, 15, 20 years, there's been huge advancements. So a lot of changing things.
All right. So one of the things I want to bring up is, why would an agent write what's the difference really between term and a permanent style insurance?
Well, the term insurance arena, we'll start with that, has changed entirely. Initially there used to be, you think of term insurance for individuals that, buy a mortgage and, their mortgage is for 15 or 30 years and they'll get a term policy out to protect for the insurance in case something happened to them and pay off the mortgage. Then people started using term insurance as far as for college funding. Myself, I have 2 small children, and each one of them were born. We took out additional 20-year term insurance options on each kid just to cover, God forbid something happens to me, that their colleges would be taken care of. So term insurance is used for many reasons, whether it be business owners and buy-sell purposes, your simple protection play. It's also a really nice, easy way for, say, an individual that's, 25, 30, 35 years old, starting a family and wants to protect his earning power. It's a real inexpensive way to have $1 million, $2 million worth of coverage and not cost them an arm and a leg to have. So that's where term insurance is really taken over as a primary component.
Yeah, and really what it's, the whole focus on having a term policy means that it is going to end at some point. And the reason why it's priced so low is, in my opinion, these carriers are assuming that most people that buy it are not going to die of natural causes within that 10, 15, 20-year term period.
Mm-hmm. You're exactly right, Steve. And I've actually seen statistics from anywhere from 98 to 99.6% of term insurance policies are either canceled or the individual or insured outlives the existing term. So you can see that it is just a play for only a designated period of time, i.e. the statistics tell us so.
Yeah, and this is going to be different from somebody that wants to do a wealth transfer. Here, we're trying to cover a specific event, right? Whether it is the mortgage or whether it is a year's worth of bills or whatever, heaven forbid, something should happen to that person. We're really talking about the accident factor, more or less.
Absolutely. It's purely a short-term protection play.
Mm-hmm. All right. So what are some of the permanent insurances that you're seeing out there that are common today?
Well, and that gets back to the ever-changing world of insurance we're in. You have everything from a guaranteed universal life, which is what I call permanent term insurance. And real quickly, what that is term insurance. You have a guaranteed level premium for the duration of the term, and you have a guaranteed death benefit. There's no cash value. There's no bells and whistles. It's the same thing with a guaranteed universal life policy. It is a guaranteed premium page $120 and a death benefit that's guaranteed to $120. The premium's guaranteed not to go up. The death benefit's guaranteed to not go down. Everything, as long as premium payments are made on time, nothing's changing. That's the most simple form of permanent insurance. And like I said, I call it permanent term because it has the attributes of a term policy. You also have a current assumption universal life policy, which is an interest rate sensitive universal life policy. As we know, current interest rates have been at record lows for many years, and the policies are still surviving and doing well. Individuals with those, what we call current assumption universal life policies, are doing well and will do even better in those policies as interest rates increase. Really, the only driving market of those policies is the Fed funds rate. It's, like I said, it's purely an interest rate play. And the last one in the universal life arena is indexed universal life, and it is the most complicated. It is a universal life policy that is indexed. Many carriers offer indexed universal life policies. Many of them have between 5, 6, 7, 10 indexes that the money can be invested in. Typically, they have a 0% floor, and they also have anywhere between a 9 and a 13% cap on return. Those policies do not have a guaranteed death benefit. They do not have guaranteed cash values. But what they do have is they have the protection, and if the policies perform well, the cash will grow in the policies, and the death benefits can also increase depending on the death benefit option.
Okay, so they're substituting a little bit of the guarantees in favor of a possibly larger death benefit. Is that correct?
Yeah, absolutely. You're 100% correct. There's a lot more bells and whistles. A lot of times you can look at insurance and you can kind of look at it like we joke about with cars. You know, you have your simple Toyota on one end, and then as you get into the more aggressive and or more, how do I want to say it? The policies that have more bells and whistles on them, you're getting into your Cadillacs and your Mercedes and whatever exotic car you can think of. But the insurance world is really the same way. You can keep it as simple as possible, or you can really get the nicest, shiniest thing on the street.
So I think the important thing to take away is an agent, one of our agents, doesn't have to do it alone. They can rely on you and on me, on our teams to be able to guide them in helping their client. So we talked about a couple different types of insurance. We've got term, which is the very basic of insurances, all the way up to a couple different types of UL policies, just depending on the need. So as an agent, give Andy and his team a call. Let us design these cases for you, whether it's a simple, married couple, or to a person that owns a business and needs to make sure that they're covered on both parties. We can help you on all of those ends. You can call Silverside Insurance at 480-998-1286. You can email us at info@silversideinsurance.com or visit us on the web at silversideinsurance.com. Thanks for joining us today.